very good afternoon to everyone watching. Thank you for tuning in to the second episode of our corporate tax series. If you didn't watch the first one, I'm going to link it in the description for you. The first episode covered the basics of corporate tax, where Mr. Mansoor, our financial advisor at Avianco, gave his insights and a little bit of knowledge on the basics and the introduction of corporate tax in the UAE. Today, we're going to dive into the elevated basics of corporate tax, and that's why we have Mr.
Hello everyone, this is Floyd Noronha. I am the financial advisor for Avianco.
So today, Mr. Noronha is going to dive into, like I mentioned earlier, the elevated basics of corporate tax. So right now, he's going to cover the introduction and why corporate tax was introduced in the UAE in the first place, and a little bit about the stats and the percentages of the tax rate. So on to you.
Yeah. So as we heard in the last video, corporate tax is a direct tax which is taxed on the net taxable profits of the company.
Right.
Now let us understand why this corporate tax was introduced. Most of the countries have this corporate tax in order to fund their infrastructure and economic activities.
Right.
But when we see this UAE, we already have some beautiful infrastructure and all the amenities. So why this corporate tax actually came into picture?
Right.
We have seen recent developments in the tax, so we can see VAT has come into picture, ESR has come into picture, and recently corporate tax has also been announced. So this reassures the commitment of UAE to international taxation standards to meet the tax transparency and to prevent any harmful tax practices.
Absolutely, I get that.
Yeah, and to speak about the percentage, that is we stand at 9% flat rate.
Right.
There was a survey conducted in 2022 which said that 142 jurisdictions out of 225 has a tax rate standing between 20 to 30%, and 118 of these jurisdictions has tax percentages 25 or less than 25%. So we stand at 9% flat rate, which is actually very good compared to all, and the highest tax rate for any country is Comoros, which is in East Africa, which stands at 50%, and coming next is Puerto Rico at 37.5%.
So like Mr. Floyd mentioned, Dubai is a very, very feasible and attractive option for most businessmen and for most entrepreneurs to set up their businesses in, because the corporate tax is only at 9% and VAT is at 5%. So there's, comparatively to most other countries, we're saving on taxes here. So now we're going to move on to the questions because this is a Q&A series. Now we're going to be diving into a few questions, so you're going to get more insight on the corporate tax. So stay tuned. All right. So let's dive into our first question. So will UAE entities owned by UAE or GCC nationals be subject to the corporate tax, and also is it applicable in every emirate?
Okay, so when we say corporate tax, it is a federal level tax, which means that it is applicable throughout all the 7 emirates of UAE, and this corporate tax doesn't actually look at the nationality of the owner. Corporate tax is applicable to any legal person, that is a company that is incorporated here in UAE, has an operation in UAE or managed by inside UAE or the 7 emirates. If it is incorporated and managed within the 7 emirates, it is applicable for UAE corporate tax.
Very well understood. All right, moving on to the second question. In our introduction, you mentioned excise tax and you also mentioned VAT. So will corporate tax replace these two, or how does that work?
No. When we speak about tax, we have to look at the point of taxation. First, let's see the excise tax. As per the FTA, excise tax is taxed on the excise goods which they claim to be harmful. For example, the aerated drinks, or we can see energy drinks which are marketed as energy drinks, or tobacco products. So, excise tax, the taxation point is manufacturing. If you are manufacturing these 3 categories, the excise tax will be applicable. Second, we can dive into VAT. VAT is taxable. The taxation point for VAT is sales. So if you are meeting the expectation or the limits for taxable sales, then the VAT is applicable. The third is currently what we are speaking about is the corporate tax. So taxation point for corporate tax is the net profits. So the corporate tax will not replace excise tax or VAT. All these 3 will be implemented or implicated as per its standards.
Okay, understood. So do they have to pay, so I think we clarified that already, but just to dive into like the thresholds and all of that. So they will have to pay corporate tax alongside VAT in the UAE, right?
Yes.
All right. So, like I said, percentages, 5% VAT, 9% corporate tax. So, how does that work? Like the thresholds, it's on 3. So, from what I understood from our last session as well, corporate tax is above 375,000 in profits, you have to pay 9%.
Okay.
And what about VAT? So,
Okay. Now, to understand how these taxes are paid, the VAT is separate concept, whereas if you meet the threshold and if your tax registered for VAT, every quarter as per your VAT filing, you are filing the VATs. For example, if you have a taxable sales of 100, you will be collecting VAT of 5%, that is 5 dirhams. If you do not have any expenses, I mean taxable expenses, during your VAT filing, you will be paying this 5 dirhams to the government as a VAT. When it comes to corporate tax, we can assume, now let's think of an example, saying that a company is making 1 million of profit. If the company is making 1 million of profit, the corporate tax is charged at 9% flat, but there is a tax slab. Up to your 375,000, the corporate tax is charged at 0%. So you'll be having a tax-free profits of 375,000. So if you deduct 375,000 from this 1 million, you will be left with the 625,000. Now this amount is your actual taxable profit. So on this 625,000, you will be charged flat 9%, which comes up to 56,250. So if you are making 1 million of taxable profits, your corporate tax which you are going to pay to the government will be 0, plus 56,250 comes at 56,250 dirhams.
all right, understood. Very well understood. Thank you so much. So moving on. All right. So my next question is, will we have to continue to pay service fees to the local and federal governments now that the UAE has introduced the corporate tax?
Okay, since the introduction of corporate tax, it will not disallow any service fees that you're paying to the government. For example, let's assume the business setup cost or your license amendment fees, any tashil fees. All these has to be paid on the basis of the services that is provided or taken from the government to its respective emirates. So corporate tax will not disallow or cancel any of these services, but still we can treat this as a deductible expenses from the profits.
All right, got it. So two completely different entities. All right. So now will I need to consider the UAE's international agreements when it comes to UAE's corporate tax purposes?
Okay, when we speak about this international agreements, it is subjective to business of every client.
Okay.
Now let's assume if a business owner has a business in multiple countries.
Okay.
For example, if he has a business in UK and India and in UAE, he will be taxed in all 3 places. So what he can do is he can undertake or he can take this DTAA agreement, that is double taxation avoidance agreement, and he can get this TRC certificate by which the owner can avoid paying taxation in multiple countries. But when we say specifically to other businesses, that is if a business is operating only in UAE, standalone business in UAE, in this case there is no international agreement will affect the corporate tax.
All right, got it. And so what is a tax period exactly?
This tax period is based on the annual year, that is the Gregorian calendar. January to December is the tax period for filing the tax. But if the company wants to change its financial period, it has to specify in advance to change its financial period as well as the tax period.
Got it, guys. Please take note of this. This is a very important point. So moving on to the next question. All right, so we spoke about non-residents in the first video and we spoke about how even they are not exempted from the corporate tax. But who is considered a non-resident?
As per the federal decree law, any company or a legal person, let's say, if he is not incorporated, that is not registered in UAE, or if the business is not managed or the business activities are not conducted within the UAE, that person will be treated as non-resident. Now you might be thinking, if the business is not incorporated, if the management is not in UAE, if the activities are not conducted within UAE, why should it be a part of the corporate tax? So the federal decree law says that the non-resident will be taxable if the income from their permanent establishment arises in UAE, or there is also another clause for this which says that if there is any income in the nexus, that is in the connection with the non-resident arises from the UAE, then in that case they will be eligible or they will be taxed for the corporate tax.
Alright, so what about the income sourced? There's a percentage for it or?
Yeah, see, if the income is sourced or if there is any activities happening inside the UAE, in that case the corporate tax will be charged. So the person, the non-resident, has to determine what is the sourced income. For that case, the person has to have a tax advisor to know what is the sourced income within the UAE.
So that's where I plug Avianco. We are a set of certified and professional tax advisors. So please reach out to us for more information. But now moving on, will small businesses be given any corporate tax relief in the UAE?
Okay, so small business. Now what the actual scenario for corporate tax is that the 9% what we said standard rate, there is a tax slab. The first slab is 375,000 with a zero rate. This profit of 375,000 itself is considered as a tax benefit to small businesses, because if they fall under this category of 375,000 dirhams of profit in an financial year, they will be not charged any tax. But in the case if the profit increases, then the tax slab of 9% will be implicated on the small business.
Right, of course, that makes sense, because small businesses, I mean, rightly said, they will not be earning, or they're not expected to earn rather, more than 375,000 in profit. So it's 0% corporate tax for small businesses if they earn less than 375,000 in profits. Exactly. So now moving on to the next question. Alright, so Floyd, how do you determine the taxable income for UAE corporate tax?
As we are speaking about the corporate tax, which is 9%, and we are continuously saying that it is based on the net profit. So corporate tax is calculated on the accounting net profit that is derived in the entire financial year, and the books of accounts has to be maintained in order to ascertain this net profit as per the international accounting standards. So once this net profit is been ascertained, the company has to make some adjustments to the net profit in order to ascertain what is the actual taxable income. Now, if we deep dive into what is the adjustment that the company is going to make in order to ascertain the actual taxable profits, we can say one of the adjustments can be capital gains. For example, if the company is purchasing or if it is selling any land or property in the name of the company, the receipt or the amount generated, the income generated from this capital gains can be treated as one of the adjustments. One more adjustment can be done is the related party transactions. Now, for related party transactions, we also have to see the facts of the related party transactions, which means that if the transaction is in arm's length, that is, if it is as per the market value or the market price, then the related party transaction can be considered as one of the adjustments. Plus, it also has to be specific to the business. It cannot be a random expense happening between the two related parties. It has to be specific with the business activity. Only then it can be treated as the adjustment to the corporate tax. Also, we can say that there can be few adjustments like incentives incentives of the tax reliefs. Yeah.
Alright, so I think there are a few more, and we're going to dive deeper into this in our next video. So this is a perfect segue to say that this was our last question for the day. So if you want to stay tuned and if you want to know more about corporate tax, stay tuned to our channel. Don't forget to subscribe and press the bell icon to never miss an update. And thank you so much, Floyd, for your insight and your knowledge. I'm pretty sure the viewers have gotten a much better understanding of the corporate tax. So thank you so much. Thank you.
Thank you so much. And if you have any questions, you can pin them down in the comment section.
You can pin them in the comments and also reach out to us and have a portfolio with our advisors, and they will help you with any and every query that you have. Thank you so much.
Thank you so much.